What if you could get paid consistently, just for owning a piece of some of the world's most stable companies? No gimmicks, just a proven, time-tested strategy for passive income. I'm talking about dividend investing. Today, I'll reveal 3 high-yield titans you can't afford to ignore. We'll break down a healthcare real estate leader, a global pharmaceutical powerhouse, and the company known as the monthly dividend company. Each has a unique story, a rock-solid foundation, and a dividend that could seriously boost your wealth. Grab a pen. This could change how you invest forever. Let's dive in. First up, let's talk about Healthpeak Properties, ticker symbol DOC, a real estate investment trust, or REIT, that's become a dominant force in the recession-resistant healthcare sector. In a world where economic cycles come and go, Healthpeak stands out as a fortress of stability, offering investors a unique way to tap into the ever-growing demand for healthcare infrastructure. Healthpeak's portfolio is a powerhouse, spanning life science campuses buzzing with biotech innovation, state-of-the-art medical office buildings where doctors and specialists serve communities, and senior living communities that provide care and comfort to our aging population. These aren't just buildings. They're the backbone of the healthcare and biotech industries, supporting critical research, patient care, and senior wellness. What sets Healthpeak apart is its strategic focus on major innovation hubs like Boston and San Francisco. These cities are magnets for top-tier tenants. Think world-class hospitals, research universities, and leading pharmaceutical companies, all locked into long-term leases. This geographic concentration in high-demand markets means Healthpeak's properties are rarely vacant and consistently generate strong, reliable cash flow. Medical offices and senior care facilities are the definition of essential real estate. As the population ages and healthcare needs rise, these properties become even more valuable. The steady stream of patients and residents ensures predictable, recession-resistant income, making Healthpeak a favorite among income-focused investors. Here's the kicker. As a REIT, Healthpeak is legally required to pay out at least 90% of its taxable income as dividends. That means the company is essentially a cash flow machine, funneling profits directly back to shareholders. For investors seeking regular income, this structure is a game-changer, providing a steady stream of dividend payments quarter after quarter. Healthpeak's strength lies in its diversification. By spreading investments across 3 pillars, life sciences, medical offices, and senior housing, the company reduces risk and smooths out returns. If one sector faces headwinds, the others can pick up the slack, creating a balanced, resilient portfolio that weathers economic storms. Recently, Healthpeak completed a major merger, expanding its scale and operational efficiency. This move not only solidified its leadership in healthcare real estate, but also unlocked new opportunities for growth and cost savings. The company's management team has a proven track record of smart, strategic decisions that drive long-term value for shareholders. Healthpeak's tenant roster reads like a who's who of the healthcare world. Major hospitals, prestigious universities, and pharmaceutical giants all rely on Healthpeak's properties for their operations. This blue-chip tenant base minimizes the risk of defaults and ensures a steady flow of rental income even during economic downturns. The demographic trends are impossible to ignore. As baby boomers age, the demand for healthcare services and senior living options is set to skyrocket. Healthpeak is perfectly positioned to benefit from this massive tailwind, with properties that cater directly to the needs of an aging population. This isn't just a short-term trend, it's a multi-decade growth story. If you're looking for a quick flip, this isn't the stock for you. Healthpeak is designed for patient investors who want to build wealth steadily over time. Its focus on stability and income makes it an ideal core holding for anyone serious about long-term financial security. The dividend yield from Healthpeak often outpaces the S&P 500 and even government bonds, making it a compelling choice for those seeking passive income. Over the years, these dividends can add up, compounding your returns and providing a reliable cushion against market volatility. Behind the scenes, Healthpeak's management is constantly optimizing the portfolio. They're not afraid to sell off non-core assets and reinvest in high-growth areas, ensuring the company stays ahead of industry trends and maximizes shareholder value. Of course, no investment is without risks. Interest rate fluctuations and regulatory changes can impact REITs, but Healthpeak's history shows remarkable resilience and adaptability. The company has weathered economic storms before and emerged even stronger, thanks to prudent risk management and a focus on essential real estate. For dividend investors, DOC is more than just another stock, it's a foundational holding. It offers a rare combination of income, stability, and growth potential, making it a smart addition to any diversified portfolio. When you invest in Healthpeak, you're not just buying shares. You're owning a piece of the infrastructure that keeps modern healthcare running. From cutting-edge research labs to bustling medical offices, your investment supports the systems that care for millions. The visibility provided by long-term leases gives management the confidence to not only maintain but also grow dividends over time. This predictability is a rare asset in today's unpredictable markets. In a world where volatility is the norm, Healthpeak's reliable cash flow is as good as gold. It's the kind of steady, dependable income stream that can anchor your portfolio through thick and thin. As always, do your own due diligence before investing. But for me, the combination of a defensive sector, powerful demographic growth, and a juicy dividend yield makes Healthpeak Properties a standout. It's a rare find that checks all the boxes for income, safety, and long-term upside. Healthpeak Properties, 𝗗𝗟𝗗𝗘, deserves a spot on every income investor's radar. It's a proven performer with a bright future, and a cornerstone for anyone looking to build lasting wealth through dividends. Now, let's move on and discover our next dividend giant, another opportunity to grow your income and strengthen your portfolio. Next, let's talk about Pfizer, ticker PFE, a global pharmaceutical powerhouse with a legacy of innovation that stretches back over 170 years. Founded in 1849 in Brooklyn, New York, Pfizer has grown from a small chemicals business into one of the world's most influential healthcare companies. Its journey is a testament to resilience, adaptability, and a relentless pursuit of scientific progress. Today, Pfizer's diverse portfolio covers a vast spectrum of therapeutic areas, from life-saving cancer treatments and cardiovascular drugs to vaccines, rare disease therapies, and everyday medications. This broad product lineup means Pfizer isn't dependent on any single blockbuster drug, which helps shield the company from the volatility that can come with patent expirations or shifting market trends. At the heart of Pfizer's success is its unwavering commitment to research and development. The company invests billions annually into R&D, fueling a robust pipeline of new medicines and therapies. This dedication ensures that Pfizer remains at the forefront of medical innovation, constantly seeking breakthroughs that can improve and extend lives around the globe. The world saw Pfizer's capabilities on full display during the COVID-19 pandemic. In record time, Pfizer developed, manufactured, and distributed one of the first mRNA vaccines, a scientific and logistical feat that saved millions of lives. The vaccine not only generated a significant cash windfall, but also cemented Pfizer's reputation as a leader in both science and large-scale manufacturing. Rather than resting on its laurels, Pfizer has strategically reinvested its COVID windfall. The company has rewarded shareholders through dividends and buybacks, but it's also made bold moves to secure future growth. Notably, the acquisition of Seagen, a leader in oncology, has turbocharged Pfizer's cancer drug portfolio and opened new avenues for innovation in targeted therapies. For income-focused investors, Pfizer stands out as a beacon of stability. The company has paid uninterrupted dividends for decades, making it a favorite among retirees and those seeking reliable passive income. Its commitment to returning capital to shareholders is matched by few in the industry. Recently, Pfizer's stock experienced a pullback, pushing its dividend yield to especially attractive levels. For value investors, this presents a rare opportunity to buy a blue-chip healthcare leader at a discount, with the potential for both income and capital appreciation as the market regains confidence. Pfizer's reach is truly global, with operations in over 180 countries. This geographic diversification not only spreads risk, but also provides a stable stream of earnings from both developed and emerging markets. As healthcare needs grow worldwide, Pfizer is well positioned to meet rising demand. Financially, Pfizer is rock solid. Its strong balance sheet and healthy free cash flow easily cover its dividend payments and ongoing R&D investments. This financial strength gives Pfizer the flexibility to weather industry challenges and seize new opportunities as they arise. While the market has been fixated on the decline in COVID-related revenues, it's important not to overlook the enduring strength of Pfizer's core business. The company's deep pipeline and established brands ensure that it remains a dominant force in global healthcare, regardless of short-term headlines. Demographic trends are also on Pfizer's side. An aging global population and increasing rates of chronic disease are driving demand for innovative treatments and preventive care. These powerful tailwinds are expected to support Pfizer's growth for decades to come. Of course, the pharmaceutical industry isn't without risks. Patent cliffs, when exclusive rights to blockbuster drugs expire, can threaten revenues. But Pfizer's strategy of relentless innovation, coupled with smart acquisitions and partnerships, helps offset these risks and keeps its pipeline full. When you invest in Pfizer, you're not just betting on a single product, you're buying into a global platform for medical breakthroughs, powered by thousands of scientists, researchers, and healthcare professionals working to solve some of humanity's biggest health challenges. The current market pessimism surrounding Pfizer is reminiscent of Warren Buffett's famous advice: be greedy when others are fearful. Times of uncertainty often present the best opportunities for long-term investors willing to look beyond the headlines. Pfizer's products are essential, not discretionary. From life-saving medications to everyday treatments, demand remains steady regardless of economic cycles. This stability underpins the company's reliable dividend and makes it a cornerstone for any income-focused portfolio. For patient long-term investors, PFE offers a compelling mix of income, value, and growth potential. It's a stock that can anchor your portfolio through market ups and downs, providing both peace of mind and the prospect of future gains. Don't let short-term noise distract you. Pfizer is built to last. Its foundation is strong, its vision is clear, and its commitment to improving global health is unwavering. If you're looking for a core holding to anchor your dividend portfolio, Pfizer deserves a close look. Its combination of stability, innovation, and global reach is hard to match in the healthcare sector. By owning shares of Pfizer, you're not just investing in a company, you're participating in the ongoing story of global health progress and potentially securing your own financial future in the process. Now, let's meet the company that pays you every single month. Our final pick is Realty Income, ticker symbol O, widely recognized as the monthly dividend company. This isn't just a catchy nickname, it's a reputation built over decades of consistent performance and reliability. Realty Income has become a household name among income investors, and for good reason. Realty Income is a real estate investment trust, or REIT, that specializes in single-tenant net lease commercial properties. Picture the kinds of businesses you see in every town: 7-Eleven, Walgreens, Dollar General, and countless others. These are the tenants that fill Realty Income's vast portfolio, providing a steady stream of rental income. What makes their business model so powerful is the net lease structure. In these agreements, tenants are responsible for most property expenses, things like taxes, insurance, and maintenance. This means Realty Income enjoys highly predictable, stable cash flow, with fewer surprises and lower risk than traditional landlords face. But here's where Realty Income truly stands out. They pay dividends monthly, not quarterly like most companies. For anyone seeking regular, reliable passive income, whether you're retired, planning for the future, or just want to smooth out your cash flow, this monthly payout is a game changer. Their reach is impressive. Realty Income's portfolio now includes over 15,000 properties, stretching across the United States, the United Kingdom, and continental Europe. This global footprint means they're not just tied to one market or economy, but benefit from the stability and growth of multiple regions. Even more impressive is the diversity of their tenants. Realty Income leases to companies in over 80 different industries, from convenience stores and pharmacies to fitness centers and movie theaters. No single tenant or region dominates the portfolio, so risk is spread out, protecting that monthly payout even if one sector faces challenges. The results speak for themselves. Realty Income has paid more than 640 consecutive monthly dividends, an incredible track record that few companies can match. And it's not just about consistency, they've increased their dividend for over 100 straight quarters, showing a commitment to growing shareholder income year after year. This achievement has earned Realty Income the prestigious title of Dividend Aristocrat. That means they've raised their dividend for at least 25 consecutive years, helping investors not only keep up with inflation but actually grow their purchasing power over time. In a world where costs keep rising, that's a huge advantage. Of course, no investment is without risk. Rising interest rates have put pressure on many REITs, including Realty Income, and the stock price has seen some dips recently. But here's the silver lining: these dips have pushed the dividend yield even higher, making the stock more attractive for new investors looking for income. What sets Realty Income apart is its disciplined management team. They don't chase risky deals or overpay for properties. Instead, they focus on acquiring only high-quality, well-located assets, and they're expanding internationally to tap into new growth opportunities. This careful approach has helped them weather economic storms and continue growing. A great example is their recent acquisition of Spirit Realty Capital. This deal added hundreds of new properties to the portfolio and further diversified their tenant base, making Realty Income even more resilient and better positioned for the future. When you invest in O, you're essentially becoming a landlord to some of the world's most stable, recession-resistant businesses without the headaches of property management. You don't have to worry about fixing leaky roofs or chasing down rent payments. Realty Income handles all the details, while you collect your share of the profits. There are no late-night calls about broken pipes, no surprise expenses, and no tenant drama. Instead, you get a reliable monthly dividend deposited straight into your account, providing peace of mind and financial stability. Realty Income's model is elegantly simple. Focus on essential businesses, sign long-term leases, and maintain a relentless commitment to stability and growth. This approach has proven itself through recessions, market crashes, and global uncertainty. For income investors, it's the ultimate sleep-well-at-night stock. You can rest easy knowing your investment is working for you, month after month, with a company that has your financial security at heart. The combination of massive scale, broad diversification, and those dependable monthly payouts is truly unmatched in the REIT world. It's a rare blend that offers both safety and growth potential. In today's uncertain market, Realty Income gives you a rare opportunity to lock in a high, growing yield from a best-in-class company. It's a chance to build wealth steadily, while enjoying the comfort of regular income. That's why many financial advisors and experienced investors consider Realty Income a foundational holding for any serious dividend portfolio. It's a core building block that can anchor your income strategy for years to come. If your goal is to generate reliable, growing income every single month, O should be at the very top of your watch list. It's a proven performer with a shareholder-friendly track record. Of course, always do your own research and consider your personal financial goals. But Realty Income is a stock that's simply too good to ignore if you're serious about building lasting wealth through dividends. So, as you plan your next move, think about what consistent, growing monthly income could mean for your financial future. Realty Income might just be the key to unlocking the peace of mind and prosperity you've been looking for. There you have it, 3 high-yield dividend powerhouses: Healthpeak Properties, Pfizer, and Realty Income. Each offers a unique path to passive income and long-term wealth. Want to master value investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now, which of these 3 stocks are you most interested in adding to your portfolio, and why? Let me know in the comments. Don't forget to like, subscribe, and share your thoughts below. Thanks for watching. See you in the next one.